Hey, Rob Romarino here with Sentry Equipment, and this month's 3-minute tip is about profit and loss statement. So let's get started. So what is a profit and loss statement? Well, it's essentially a financial statement that summarizes the revenue, costs, and expenses specific to a time period in your business. And it's a very helpful tool if used right. A profit and loss statement in conjunction with your balance sheet and your cash flow basically assess the marketability and the worth of your company. So if you're selling your business, having a good profit and loss statement is essential because it's really going to give the business a good value. And whoever's buying it will understand the value of the company. But if you're running your business and no aspiration to sell, it's equally as important. But why? Well, it can help you operate your business. First and foremost, in this type of industry, food cost and margin is essential. So a profit and loss statement will help you evaluate your cost of goods. Subsequently, evaluate your food cost. Are you spending too much on your products, on your menu items to sell? Are you not making the margin that you need to make? A good P&L will help you understand that. It will help you understand your labor costs. Looking at your labor, are you spending too much in labor for the revenue that you're bringing into the business? It'll help you understand your fixed expenses. You know, your rent, your electric, your gas, all these different things. You know, you write the bill per month, but when you look at it in a P&L, you could really understand how it's impacting that business, all right? And ideally, all these things, your food costs, your margins, your labor costs, your fixed expenses, you could look at it on a snapshot basis. You could look at it this time last year, this time 2 years ago, this time 3 years ago. See what trends there may be, up, down, in, and out, so you can change on the fly in your business. That's the advantage to a business. You can put your arms around. You can make changes based on what the P&L is telling you, all right? Evaluating your P&L will enable you to increase your earnings by reducing unnecessary expenses, right? It would allow you to analyze what you're spending, analyze what you're bringing on, and make those necessary changes. A good P&L has all your expenses in it, all your revenue items in it. It's broken down into categories and subcategories so you can analyze it properly. You can reduce unnecessary expenses, increase the revenues that are in a positive format, and increase your overall income. So when you're doing your P&L, well, whoever's doing your P&L, make sure you have all the items in it. And make sure you're looking at it regularly and comparing it to different time periods, whether it's quarterly, monthly, year over year, so you can change on the fly and make the changes you need to make your business as profitable as possible. Time's up. We'll see you next month.